Welcome back. The Nifty is still holding below that 24,000 mark, closer to 23,970. Reliance is at the low point of trade as we move towards the European opening. Where do we go from here would be the big question. But all of that will also be impacted by what macroeconomic data is currently underway in the world. More than that, the currency impact as well. So we have who better than Latha to tell us exactly what's taking place in the yield space around the world, the macroeconomics of it all, and the currency impact. Before we go across to the expert, we have our in-house expert with us, Latha.
Well, though the headlines may say, lowest in 2 years for bond yields, lowest in 26 months, I think, and lowest rupee ever record, we must know that it is a very small move. The story in emerging markets and in India is a question of not reacting so much to the turmoil that we have seen in the US markets, in the global or in the developed markets. Just look at the dollar index. It's fallen from 104 on Thursday, before all the data came, to about 102.97. That's a very big index fall, over 1% in terms of the dollar move itself, such a large currency. But look at Asia. The yen and the ringgit are up 2.2%. I mean, because the dollar has fallen, they are up versus the dollar. The Chinese renminbi and the Filipino peso are up 0.2%. The rupee and the baht have fallen, but fallen how much? 0.1%. So although it may look like a record fall for the rupee, it's not fallen much. To be fair, we understand from dealers that the Reserve Bank may have come and sold dollars. But in any case, it's not a volatile fall like you're seeing in the US equity or the global equity markets and even the Indian equity markets. The point is the kind of fall that we have seen in the global markets is led by the US fall, the US equity fall, and the US tech fall. So it need not necessarily be a big macro fall for Asia. And again, coming to the bond yields as well, the bond yields fell by 20 basis points in the US. And if you compare it from July 1st, the US yields have fallen by some 80 bips. They were 4.5%, the 10-year yield in the first week of July. And now they are standing at 3.7. So it's, like an 80 bips fall. But what is the Indian bond yield fall? It was 7%, 7.01 in the first week of July. And now it is 6.84, all of 16 basis points. So we must accept that this is not disturbing Indian macros just yet. But it is just yet. Already there is a whisper in the street that the Reserve Bank may have to change its stance as early as the upcoming Thursday policy. It's saying a withdrawal of accommodation at a time when, the Fed will probably supply liquidity and supply, rate cuts, probably 50 bips, probably intermeeting, may be a bit of a, out-of-date policy, and they may, even if they don't change the stance itself in the policy statement, they may indicate some dovishness in the press conference that follows the monetary policy.
Okay, well, important RBI policy to monitor there then. Latha, thanks very much for that. We do have